Okay, so we're going to go over recording closing entries for the income statement accounts. It's work together 16-2. Remember, the income statement accounts are the temporary accounts that we have, and we need to close them at the end of the fiscal period. Okay, so first what you're going to do is close the income statement accounts with credit balances. Those are revenue and contra cost accounts. And then we're going to close the income statement accounts with debit balances. Those include cost accounts, contra revenue, and expense accounts. And then third step is to record the net income or net loss in the retained earnings account. Remember, retained earnings account is like the capital account in a sole proprietorship. So we're going to record whether we made money or lost money into that retained earnings account. And the last thing we're going to do is close the dividends account. Okay, so remember the income summary account is the only account that does not have a normal balance side. So whichever side, you just use it mainly to close your accounts, and it will close itself along the way after you're done posting. So first I want you to look at 16.2, the work together for 16.2. And that's on page 431 in your workbook. And I'm going to grab out the related worksheet here. We're going to use the work together from 16.1 for this. And that is on 425, 426 worksheet. So if you'll remember right from when we did when we close our accounts, we close them in the order of dies going backwards, okay, is a way to remember what order that you close them in. Okay, so if we look at we're looking at our income statement accounts, because these are our temporary accounts, plus the dividends account is another one that we close, and that's in the balance sheet side. But the income statement accounts, we're going to close them in the order of dies going backwards. Okay, so sales. Okay, so basically anything that has an income statement credit goes first, and we're going to close those accounts. So sales, in this case, income summary, purchases, discount, purchase returns, we're going to close those balances. Okay, so because they have credit normal balances, what we're going to do is debit them. Okay, so sales, purchases, discounts, and purchase returns and allowances. Okay, those are the ones that we're going to debit so that we close those accounts. And so we'll come here and close those accounts then. Okay, so what we're going to do here is take our any income statement accounts for accounts with credit balances, we're going to debit. Okay, so we're going to go here, and we're going to debit any of the income statement accounts. So we're going to put the ending date, which is December 31st. And we're going to start with income summary. And then sales. And then purchases, discount. And then purchase returns and allowances. Okay, so we're going to debit all of those. So if you look at the balances on your income statement, this is income summary, sales, purchases, discount, purchase returns, and we're going to debit all of those. 1,000. Put up at the top here before I didn't put the title, closing entries. So 1,848.25 and 430,000, 521.58 and 345.25 and 5,548.74. 5,548.74. And then we're going to add up all of those and credit income summary, the total. So add up all of those and then we'll credit those for the summary here. And then the